we're going to talk about creation of imbalances. Why? Because when you do trade, you don't actually enter your trades anywhere you like. There should be a certain area that you look at before you enter the charts, or before you put your buy and your sell, right? So we have something that we call creation of imbalances, or you can say creation of zones. So the zones are actually what makes us to enter, what actually gives us the signal that we can enter on the market. Okay, so and remember, most of the time when you see the charts, they are giving you two opportunities. Opportunity number one is that a chart can tell you that there is balance. If there's a balance, it means you can't trade, all right? So when there's an imbalance, it means now you can trade, right? That is what I'll be explaining further for this session. So when are imbalances created? There are few scenarios that forces creation of imbalances, or we can say forces creation of zones, right? So scenario number one actually is that when you see a trend line break will give you an imbalance. All right, let me put this here. That number one, trend line break. Number two, opposing imbalance. Number three, all times highs and all times low. All right, so the other concept we'll talk more later during our sessions. All right, so I'm going to talk about first a break of a trend line with a full candlestick. We learned how to draw a trend line, right? So whenever you draw a trend line, and you'll always find that there is somewhere where your trend line will be crossed by the candles, right? So when that trend line is crossed by the candle, it will present you with an opportunity, which we call is the creation of an imbalance. And there are few factors that we have to consider when that happens, right? To see that, okay, indeed, I can trade this pair, or I can enter a position, all right? So now I'm going to go to the charts so that I can actually talk about the area of a trend line, the break of the area of a trend line with a full candlestick, what that actually means. Okay. Because I'm still opening my MetaTrader here so that I can actually share with you. But while my MetaTrader is still opening, let me draw the scenario here so that you can understand what we'll be talking about. Okay, so remember how we draw the trend lines. We draw trend lines like this. Okay, let's say this is a bullish pair like that, right? This is when price is going up. Okay, so what do? You connect the latest two valleys or two peaks. Okay, right? Let me show you here. Be quickly to show here. Okay, let me do, where's my eraser? Yes, there. Okay, so usually you'll have a pair that shows two V's. Okay, like this. You draw your trend line. Okay, this is a bullish trend line, and as this pair will be continuing going up, there will be a time where this pair will cross the trend line. All right, so this, I'll say it's a trend line. Okay, and this one, these are V's or valleys. Right, the concept, you connect two latest values, which means two latest values. Actually, you can connect these two here, and then the trend line was crossed. So usually when the trend line is crossed, you have to look for something like this. It should be crossed by a candle like this. Like there should be a candle that doesn't touch the trend line at all to consider that a creation of an imbalance, right? So in this scenario, we'll say you look at this candle here that crosses this trend line, right? And then you can say, no, there is an imbalance. There is an area of interest or a zone that you can be interested on to trade, right? So actually what will happen after that, you expect, when this happens, you expect price after that to go back and test the area. Maybe the area, it will be here. Test the area, and then after that, price will go down or dropping. All right. Yeah, sometimes this can happen and price wouldn't go back to test where it crossed, but after that you use another entry point whereby you have to look for the zones that are with the move of the price, right? And then the other thing is this here. Usually these zones, they create something we call demand areas or demand zones, right? So with this, I'm going to, let me write this down for you. How do you consider a pair to be going down or to be going up, all right? So usually when a pair goes down, it have to eliminate two zones. Okay, two zones. They could be a supply or demand zones. All right, whenever you see that happening, it's a sign to tell you that the dynamics of that time frame, they have changed, right? And then meaning you have to be prepared to sell that pair going down, right? So when one demand is eliminated, also it just telling you that we might be going down, all right? But when two demand zones are eliminated, that one is change of trend. The trend, if the trend was bullish and then two demand zones were eliminated, now the trend will be bearish. Okay, so like here on this example here, we have the first demand, which is here. Okay, so when the trend line, when we cross the trend line and we take out a demand zone, then that's when you can put your sell limit at the origin of the move. Origin of the move, it means where that pair started dropping, okay? Or where that pair started forming the bottom or the top of that peak, okay? So that inverted V here, you put your sell limit here, and then the pair will go test it, and then it will fall down, all right? So first demand eliminated, it's a good indication that indeed price might drop, okay? Second demand eliminated, it is a good sign that now we are downtrending, or that pair, it will be starting to fall harder, right? So that is very important. So usually, to summarize this, I was saying, whenever you draw your trend line, you draw two latest values for drawing a bullish trend line, two latest values, right? And mostly, as said, when this happens, when price crosses the trend line, it will go back to test the area. Usually, when price crosses this trend line, it's either it come to test this the previous demand zone, or to break it. When it breaks it down, then we expect price to fall, okay? And for this scenario is for determining when to do your sell, okay? So for entering your buy at the cross of the trend line, usually the price will be printing the inverted V's, okay? I'm trying to draw my V's here. Still trend line here, okay? So when price goes up like that, there's one here, another one here. When price crosses it, you put your zone somewhere here, and then price is expected after this to go up, okay? So now let's go look on the live charts to see if this is actually something that will always happen, all right? Okay, let me share my screen. Let me share my screen here. Where is that on desktop? Okay. Okay, I guess every one of you guys can see my screen here. So this pair, it's USD CHF. So we can just start by looking at the at the bigger time frame. Actually, let me try to use the common pair that everyone usually trades, which is this one. This is Euro USD. Euro USD. Let me clean it so that we can bisect it together. Okay. All right. So, firstly, what you do when you see a pair like this, let me take the H4. When you look at this pair here, there are things that you will notice. What do you look for? The valleys, right? The valleys and the peaks, the latest two. Okay. So when you look at this pair, where are the peaks or where are the mountains? We have number one here. And let me check this one. Okay, yeah, which means on the H4, this will be our latest trend line. Let me increase the size. Okay, H4, this is our latest trend line. And let's check for the latest trend line on the bullish ones. Okay, let's click here. And then for here, this is our H4. This is our latest trend line for when price is moving up. And this one is our latest trend line when price is moving down. Okay, so like what I said is that whenever price crosses the trend line, what happens? It will leave a trace at the top, like this area. I'll call this area, is the latest zone. Okay, or there was a creation of an imbalance here. All right, so and then it keeps on falling, so it didn't immediately go. At first, what you do, you put your sell there, right? Your sell limit there. Yeah, so it's been falling, and then another zone, it created another zone here. All right, so still this wasn't giving it time to fall. And then another area of interest, yes, this one here. Actually, the latest valid zone that crossed the trend line was this one. Okay, why? Because this is it's a CP. CP, remember we said CPs are continuous patterns, meaning whenever price is falling, it will take a pause and continue falling. All right, so when you trade supply and demand, what happens is that price will pause when you find that pause. Okay, or when you find that zone, or that zone that sometimes we call it an imbalance. Like example, in this here, this is called a supply zone. You draw your zone there. So that is my zone. And then what do you do? When price was here, just ignore this other side. Okay, so when price was here, I did set my limit order here. I mean my sell order here is limit sell order here. So what happened? You can see price went, touch the area, and then it fell. Okay, so why? Because price managed to cross the trend line and it left a trail at the top there that, okay, I have an entry here. This is where you can enter. Okay. And the other thing, this is the H4. And when we are going up, we had areas, okay, or the footprints that help us to enter as we are growing up. Like example, when you look at this valley here, or this V here, look, it crossed when price started to move or rally from here, it crossed this area. All right. Crossing this area, what happened? It meant that there will be an area of interest at the bottom here that took out this area, which means this area was super strong. And then what happened after that? You set your limit order here, and then price will come down to test that area that took out this zone, or which was a higher high, and then after that price went up, which means this area is called a demand area. Okay, it was nicely tested. And then we have another area here. This one here, if you attended the previous sessions, this one is called a CP, a continuous pattern. All right. So usually for this, I would have set, okay, I set my stop, my limit order here, and then I took a loss in this area. So usually when I take a loss, I know that, which means that move, there's a high possibility that move is exhausted. And what will happen? Price, after taking me out from this trade, my expectation is for price to continue falling down. Why? Because it eliminated this supply. I mean, this demand. Now, the only demand that is available is this bottom one. Can draw it like this, is this bottom one. So, which means if price removes this one, my take area, my area now, the valid one, is here. I expect price to fall further down to the bottom here. Okay. So what happened? There was a parcella there, trend line crossed again, showing you that indeed price is going down. This demand was eliminated. Okay, meaning we are no longer buying that pair. Okay, meaning what do? We're going to start sell that pair, okay, on that particular time frame. And then you sell Euro USD here, go back, test, and then fell, right? So, and usually you know that whenever price creates this mountains, usually at a certain time it will go back to test that area, and then will fall down again. Example here, price here, there's a hypothesis that price will come here, test this area, and then goes down. All right. So now the other thing that we have to look for now here, you have to see if somehow price will create another mountain, or will create another peak. Okay, so let's go on the other one further so that we can practice this concept again. Okay. Okay. Yeah, another one is here. This one need to, let me just take out this. All right. So here again, what do? You look for two V's or two valleys, right? Which is here. Starting from here, this is a nice V formation. Okay. What do? You draw your Did it make a higher high? Let me check. Yes, it did. Okay, so there's a V here. This one it's a CP, right? And a CP usually it creates a demand. This one also it's a CP. Usually CP creates what? A demand. And then this one it's a valley here. All right. So what happened here? Price crossed the trend line, and when it crossed the trend line, the area actually that made that cross, it's here, and then it crossed this CP, and then it started falling. Okay, when you are given, immediately when you see this happening, it means this pair is no longer going up in that particular time frame. And then after that, this pair started falling down, right? So this here, these are demand areas, okay? I mean, supply areas. So nice supply here, went, tested it. Another one here, this area also, it's a supply, okay? Can go further. This area here, all this are the supply areas, okay? So, and if you can notice something here, I'm not drawing the trend lines here. Why? Because there's only one formation here. There's only one peak or inverted V's here, right? And there's no any other V's here. Because why? A peak, it usually it's a it will be formed of a rally base drop. Okay, rally base drop. They make what we call a peak. Okay, so here we don't have rally base drop. So the only things that we have is drop, base, drop, which are CPs. CPs are drop, base, drop, meaning a dropping leg, and then here a base could be made of more than 6 candles or so. And then after that, what happened? Price dropped, which this formation is the CP. Okay. This is what you can see all on these patterns here, right? So when you go down, it's been printing all those patterns. Okay. So let me check another one. Let me delete this one so you can, so I can show you what I mean, that the break of a trend line, it creates the area of interest. Okay. Look here. It's a nice peak there. Okay. And another one peak here. So you just connect. Actually, so it's here. The latest 2 peaks, you connect these guys, trend and break down here. Here, this is actually the area that we're breaking the trend line. So what happens? Price crossed and then it started rallying up or going up, and then later price came back again, tested this area, and then went up. Okay. We can also here, look here, another one, valley. This is a drop rally, drop rally, drop rally. again, this is your latest ones. So here, this is the area that started to break. Okay, so what happens? Price went back to test this area and it went down. So actually here, when you look at this pair, you can see that price was actually ranging between this area and this area here. So price has been playing up here. So usually when it's like this, at a certain point, you expect price to break from that ranging zone. So where did price break from that ranging zone? Here. This area was super strong. It broke this guy here. Okay. So usually what happens, price have to come down, test this area. Actually, price in future, it will come down to test this area. Why? Because it was super straight, managed to break this resistance. Or yeah, okay. So it printed a pause, then went up again, crossed. Okay, so that is why I said now in future, look what happened. Price returned or turned from this area. Why did price turn from this area? It's because this area is the one that took this monster who was too powerful. I get it. And then price tested the area and then respond to it. Okay, so let's check another one. Oh, actually, let's use a different pair. This one is pound USD. Okay, pound USD. Let's look again for this. Look here. We have a nice trend line here that you can draw. Look. Okay. Make sure you touch the lowest lows. Here, look. Okay. So why this? Because there are super two V's here, valleys, 1 and 2. Okay. So price broke the trend line. What happens? Definitely it means this area here, it will be called the area of interest. Okay. Broke the trend line, set a limit order there if you are trading it, and price failed to do what? To touch this area, which is okay. It does happen a lot of times. So, and then when you look here, we have supply, demand number 1, when price this area, and then we have demand number 2. Okay, so look, price came, touched this demand, reacted. Usually when you are scalping, it's a nice entry for you, or when you are trading lower time frames than H4, there's a lot of money from here to up here. Okay, so price reacted, and then why actually you wouldn't buy here is because when the trend line was crossed here, it's a sign that, hey, I might be changing direction. It's a sign that pair is telling you, man, we are now starting to go down. I get it. So trend line was crossed, touched this weak demand. Actually, this was a weak demand. I get it. And then what happens? Took it out. When it crosses it, we say it took it out. And then after taking it out, what happens? It will also, when this demand was taken out, now you have to be like, okay, the momentum is on the downside. Again, it took out this demand here, all right? And then after that, what happened? Since then, it's been falling down. I get it. So in future, what happens in future? Look, as price was falling, it was leaving prints. Where did it start? Here. This move started here. That is why price, it went at first when this pair was falling, it actually never went to touch that area, which made the effect of crossing the trend line. And then in future, when price near that area, comes near that area, expectation is for price to react from that area and fall further down. Okay, so like here, though it took days, I think it could be maybe the whole month for this move to happen. All right, set your limit order here, touched, and then it went down. Okay, so even though that was happening, this was tested. Price even here did what? It failed, which means this trade here, it failed again. So that is how you can use trend line to give you the signals or the entry points for entering your trades. Okay, so let's look up here. Check this out. Oh, okay, if you were to analyze this pair, the latest V's is 1, and then this one is not a V, it's a CP. Okay, another V here, another one here. This one is that super too close. For this ones, usually you can just ignore them, because you need to, the reason why it's very important for you to know how to trade lots of pairs is that you won't look or enter trades that are not there. Okay, if a certain pair doesn't give you what you want, what do? You move to another pair. Okay, let me stop scrolling and then put in another pair here. Okay, so let's look for this one looks interesting. Okay, show you. Let me show you this area. What was happening here? Let me show you here. Okay, go man. Delete. Okay, delete. So when you look at this pair, where did price 10? Another one V here, and then another one here. You draw your trend line. Okay, you draw your trend line, and then what happens? You draw your zones. Zone number 1, which is demand. Okay, and then this one is the one that actually made touch this area, and then at the top, it's here. Okay, so because it's already been there, you can take it further there. All right, and then any V's here, here, we do, yeah, in this pair we don't have any values. Okay, so what happened, what I'm trying to show you up here is that price crossed the trend line and started dropping. Okay, and in the lower time frames, you will find entry points or the areas that you can trade. Okay, this usually it will depend on your strategy. So let's look here. Another, this one is there any lower here? This one is lots of basing candles. If it's confusing you, you just skip it. Okay, because trading, that is why we have thousands of trading pairs. They are made for you not to find trades where they are not. Okay, so demand number one was tested. Okay, another one tested, and then price reacted. This area, this is the one that affected what? Crossing the trend line, this top one. And then what happened? Price started falling, taking out that one. Okay. Further, NVs, one here and two, another one here. Okay. This area. This one, this pair is too weaky, but yeah, usually for pairs that have this long wicks, they are not good for when you have small accounts, because this wick can take you out most of the time from your trades. So the concept still applies. Trend line crossed, and then the pair went down. Okay, and here this top one is where that move started. Look, price been working here. Okay, look, can go further here. All right, and then just look. Yeah, let me look for another pair that's not wiki. Okay, let's look at this one. Delete. Well, I won't confuse you with anything. Okay, when you look at this pair, which is USD CAD, the daily time frame, the first thing first, what do you draw? You draw your latest valleys and peaks. Where are they in this pair? Let's go to the for. Okay, the scaling is not good. This one, I'm not scaling it. Okay, I wanted to scale that up, down. I'm not going to scale it. All right, let's look here. Look at this trend line V here, nice V with this one here. Okay, you draw your trend line. All this will be your demand, supply areas. And then here, this is the move that actually this move started here. The move that crossed the trend line started here. And here, there was a nice CP here, which is a continuous pattern. When this pattern is printed, after crossing the trend line, you know that it's a pause. Price will come down, test the area, and go up. See, crossed, touched it, went up. But still this, though it's a demand on top of another, it's a valid demand. Price again, what did it do? It touched the area and then went up. Okay. So let's check other patterns. Look at this one here. This one, it's a CP pattern. I'm not going to draw it. I'm connecting the latest two valleys, right? Which are these two. Okay. This area, this is where price started call that a demand. And then another one here. This still, it's a demand. Cross the trend line. Where did this happen? This move started here. Okay. So, and the other concept that when I started the session that I talked about is before you draw this, you draw only this zone when you see this candle here. Okay. When you see this candle, that's when you can start drawing your zone. This one. This candle here. When the trend line is crossed and you find this candle or any candle that is not actually touching the trend line, we have to know that it's an entry at the top there. So like if it's this one, it's a no. You have to wait for this one here to levitate away or to move away from the trend line. It shouldn't be touching the trend line, okay? Like if this is a trend line and price is falling usually like this, and then you see this one here, that's when you can consider that zone valid, which means your zone will be here. Okay. Or sometimes it could be like this. Even if it's like this. Okay. Even if it's like this. Yeah. The fact that this didn't touch the trend line, it means the zone here is valid. Okay. The same is the same thing with your supply. Okay, supply and demand, both of them, those zones are the same. When you trade the pair going up, you look for that. When you are trading the pair going down, you look for this again. All right. So that is very important. Okay. And if that, it will help you not to experience a lot of unnecessary losses. Okay. Right. Let me show you what I mean again. Look, when I draw my trend line, like this one is the valid trend line. Okay. And the candle that told me no, this is a position I can consider is this one. Yeah, this one is the one that said no, you can come and look here. There might be nice entry here. All right. So yeah, like you can see this one, it went, break it up. So it will be a loss, which is part of the game. So, but the fact remains is that is how you draw your trend line. Like look here, this trend line here. So this candle here, that doesn't touch your trend line, is the one that tells you, please consider this zone. There might be an entry happening there. All right. Look at here again. Look, again, we have a V here, another V here. We connected later those two V's, which means where did the move start? The move started here. Again. So now which candle crossed the trend line? Is this one. Look at it. It's not even touching the trend line. So which means what happens? Went back, touched, and then went down. So that is how simple it is, and very important for you to know this. That is critical. Okay. So note of this. Let me show you something else again. On this pair, where am I? These here. Yeah, look here. We have V here. Okay. Right. Where did this move start? Here. I get which candle crossed the trend line? It's this one. It didn't touch the trend line. That makes this entry to be an area of interest or a valid area to look at. What happens? You draw your zone. You can actually draw your zone like this, connecting all the bodies, okay? Or depending on your structure, you can actually draw your zone, including all this. Okay, let me use a proper triangle for drawing this. Look, two ways you can draw it like this, okay? Or you can draw it like this, okay? So either way, any of those actually is valid, all right? So look, my trend line is here, okay? Oh, when I draw my trend line here, it shows me that the one that actually properly crossed was this one, which is still okay. Good. Went up, touched the area, dropped. So this applies for any time frame, okay? Any time frame. You go to 1 minute, the same thing is happening. Let's go to 1 minute time frame. Let's see if we can find similar things. Okay, I want the ones with nice formations. Look here. This is a 1 minute time frame. My trend line, rally, drop, rally. No, this one is not. This one is not. This one here. Did it make it a lower low here? No, it didn't. Here, fine. Here and here, yeah. So up here, when you go up, which one here cross the trend line is this one, which means it made this area to be valid. And we also have a CP here, okay? So what happens? Price touched, you scalp, and then reacted, and then crossed up. When it crosses this area, after that, we know that, okay, price will be on the upside, okay? Even if you can go on 5 minutes. On the 5 minutes. Okay. Oh, the way it moves. I think it's my first time opening a 5 minutes time frame on this pair. Okay, let's look here. Valid there. Okay, this area here, draw my zones. This was demand, another demand here. So this candle is the one that crossed the trend line, validating an entry points there. Okay. So for the smaller time frames, for any time frame that is less than H4, it's very important for you to know the direction of that pair on the bigger time frames, right? So if we have a pair like this, first, guys, this is very important. You have to, like example, when you look here at this chart, without any analysis, you can find that this pair is low on the monthly curve. Monthly curve, we mean these candles, they represent one month of time. Okay, so which area is the valid one? This one here. This is a monthly area. Okay, so and look, what we have to notice also is this here. This ticks, it means this area was taken out, which means for USD CAD, in the longer term, guys, there is a high possibility of this pair falling further down to this area, and this area is already weak, so it's high possibility that USD CAD, it will break down to this strong monthly demand. Okay, so now if you are trading the lower time frames, what do you look at? We still can use our trend lines, valleys here. Okay, so what do? Draw your trend line. Any here, drop, rally here. Okay, another one here. This, it's a 2Vs. Okay, anything here, rally here. This, no, that one is not valid. And look, the latest one is this one. So price, what did price do? It touched this area and then it reacted, meaning it went down, right? So as it stands, with this pair, before you can take any position, you have to wait for this area to be removed, this one. Okay, if this area is removed, why? Because there's a supply here. If this area is removed, we expect it to go down further. Like if you go on the daily still, look here, it's penetrating. Yeah, high possibility that this area can be removed, and then we go much further on the downside. All right, so for today, guys, what I wanted to share with you guys is all this, that the break of a trend line with a full candlestick, this is the keyword. Okay, keyword is, I wanted different. Okay, let me take this one. The keyword is the full candlestick. It means you have to look at that position, right? If an opposing imbalance has been eliminated, all right? So meaning if this is where your price was going up and this was your zones, okay? When price fall down and then it removes this area, it means this area here is the area of interest. Like that way you have to look when you want to enter your position, all right? And then the other one is called all-time highs and all-time lows are eliminated by an impulse strong enough to consolidate away. Usually this here, I'm referring to pauses, okay? So pauses on the market will give you entry points, okay? So you can enter your positions based on this or based on these formations that are valleys and peaks, and these ones are continuous patterns. Okay. And the other thing that I was showing you was here. When you see two zones taken out, okay, it could be supply or demand zones. Automatically that it means a pair is changing the momentum on that time frame, meaning the pair can start falling, okay, or it might start going up. Those concepts are very important, okay. For this, I'll take questions. Anyone with a question? You are welcome. Anyone with a question, guys? You are welcome. Any pair that we should analyze? Okay, there's a pair that I want to I did give it out on the previous session last week. It's pound JPY, this pair here. Okay, so analyzing this pair, we go here on the monthly. When you look at this pair, the monthly, it came to this area. And what did he do on this area? Because this was very important. There's a tick here at the top here, okay? So meaning this pair, we expect price to go higher. Price have to go here to touch this area, okay? Why? Look here, there's nothing here. This is just nothing. Consider this a void that they have passed through it to go here. So now, which area is valid for us? Which area can we use to enter this pair? We have this. Let me delete this things here. Okay. Look here, a V, and then another V here, and then a CP here forming out. And usually while a CP is still forming out, we call it a potential continuation pattern, all right? So which means there is a CP forming out here, okay? And why this CP is very important is because it looks like it's the one that eliminated this strong man here. So we go to the weekly. I'm going to delete this so that you can see the candles clearly, right? So on the weekly, this is the latest weekly trend line, meaning with this pair, we are on the upside, okay? And on the weekly, which area can we set our limit orders, our buy orders actually? Is this area. This is a proper demand. Why this demand is super strong is because it's actually on the weekly is the one that eliminated this area here. Okay, is the one that took out this area. So which means is that area it's super strong. Okay, and that area that it took out is also a monthly supply. That is why this area is super strong. And what about on the daily? Okay, now on the daily, which area is strong on the daily? Here, this area here is the one that actually strong. Okay. I wanted to delete this, not the chart. Yeah, why this area? This area, remember we said this pattern is called continuous patterns, all right? Continuous patterns, what happens? Price will come, test the area, and rallies, right? So another, I personally consider this one weak. It's a CP that is weak. Why is it weak? Because it didn't consolidate away. Consolidating away, it means there should be a candle after this pause. Like here you can see there's a base rally, okay, and then another rally there. This area is the one that we usually say it consolidates away, meaning it didn't actually even touch the start of that move. So this one here, it's weak. Why? Because it didn't, it's when the price started moving, it immediately on the next day came down to touch and move up. So I do expect this pair, pound JPY, to fall further down here to touch. Is either it can touch this area or this one. Okay, if it touches this area, if it comes here and break this area, we come and wait for it here. Why? We are not actually here selling. The only thing that we are doing is what? We are buying this pair. Okay, so why? Because if it comes down here and take me out from my buy limit, okay, what am I going to do? It will hit my stop loss, preserve my capital, and what happens? I come again here, set my buy limit here again, okay? So if, which is highly unlikely, if it takes me out here again, I'll come here. Why? Because another valid area It's here. Oh, was this one touched? Let's check if it was touched from the move. No, it's not. Yeah, which means this area, it will be valid. Okay. So if any of this, let's say this get triggered, I open two positions, right? Or of the same, on the same thing, I open two positions. When price reacts, because it's highly possible, not 90%, when price reaches the area, this area, when price comes to reach this area, it will react. Okay. And when price leaves it, I move my stop loss toward to an entry point, so that if it goes down, I'm still preserving my capital. Okay, that is something kind of like, you can say that is money management. You are managing your losses. I get it. So if it comes, take me out here, I'll say, okay, I'm going to wait for it down further here, right? And from here to here, guys, if you were to take, okay, I'm going to show you something. Let me just buy. I'm going to just buy. I'm going to buy it with 0.01. Okay. I want to show you something here. Okay. That is a buy. So now watch how much money you can make until price comes here. Around $180 just by 0.01 lot size. Okay, it's not one lot size, no, it's just 0.01, because if this get triggered, our take profit, it will be up here. Okay, our take profit, where will it be? Up there. So if somehow you have enough money, you do by 0.10 by market, show you. Oh no, it's still pulling the 0.1. Let me just close the 0.1, because I'm expecting price to go up there. Okay. Yeah. Where is it? With 0.1, look. With 0.1, you'll make around 20,000 there. 0.1. Okay. So